We welcome on board Sudip Bandyopadhyay as well and find out what his market view is right now. Sudip, hi, afternoon. After all that flux that the markets went through all through the election week, do you think it's, I mean, we've already seen consolidation play out, but do you think it's going to continue for some more time?
Absolutely. I think, look, while we are consolidating at an elevated level. And I think this is the trend which we'll keep watching. The next big trigger will be, of course, the union budget, which is coming up sometimes, within the next 15 to 20 days, maybe. The next thing important, of course, which the market will keep monitoring is the progress of monsoon. I think these are the two critical things which the market will keep wondering and keep monitoring. Of course, as soon as the month of July starts, the earnings season for the first quarter will also start and the market will monitor. But these are factors which market will worry about. But the biggest and most important thing which is pushing the market up is the liquidity, unabated and continuous flow of liquidity, both domestic as well as international. I think that will continue and that will ensure that market keeps moving up. At every higher level, there will be a bit of consolidation for some time and then again it will reach a new level. So, I think this year we will see a secular upward movement with in between consolidations at different higher levels.
Okay, so that's the latest coming in on some of these stocks and sectors. But tomorrow, Mahindra Group's Investor Day is there. So the Mahindra Group has definitely undergone a big transition over the last 3 to 4 years since Dr. Anisha has taken over. Do you think there is those untapped gems still in the group that you think can still re-rate from here on? Have you looked at some of these group companies closely?
We have, and there are interesting companies and interesting stories. But as things stand today, even now, Mahindra does look good. The flagship company, Mahindra and Mahindra, M&M does look good. M&M has been firing on pretty much all cylinders except tractors, because tractors is something which was the volumes were subdued because of monsoon and rural distress or whatever. But as things look now, I think with a good monsoon, tractor volumes also are expected to pick up. So once the tractor volume starts picking up, I think we will see further upside in M&M. The company has done, fantastically well as far as the SUV business is concerned. They have done well in other smaller segments as well, including farm equipments. But I think the tractor is one thing which was, performance in tractors was missing, and that will be icing on the cake as and when it happens. So this is one good company, definitely of the group, which we should look at. M&M Financial is a company which, while the potential is huge, at this stage we are not recommending a buy in M&M Financial. There are multiple reasons, including what's happening in rural India. Things are supposed to pick up, but we'll wait and watch.
That's what Sudip is liking within the entire M&M group. But Kunal, what do you think is the strongest chart when it comes to the Mahindra group, and would you continue to bet on M&M?
Yeah, I think M&M is the strongest name from the pack. I think that stock has done exceptionally well. Even at current levels, I think it's nearing just 150 points away from 3,000 mark, and this is an exceptional move for M&M. I remember, I think 2022 made the stock started off this move from 750. 775 odd levels, and the stock has done reasonably well and been more consistent with the up move. Mahindra and Mahindra Finance also is an interesting chart. Even though the stock had gone through a sharp phase of correction, I think from 315 levels towards 245 to 50 odd mark, but recently the stock has made a strong comeback. I think 285 to 90 is where the stock had broken past about this 200-day moving average range. So that's also another interesting name. Of course, in terms of price recovery, this stock can also tend to recover quite smartly from here. The high beta nature of the stock would also propel the stock on a much higher basis. But I would believe M&M is a much more consistent chart, and I think even a 5% dip, say 150 odd points correction from a swing high, is generally a good opportunity to try and chip in.
Okay, so that's about the Mahindra group of stocks. Definitely all eyes will be on that investor day tomorrow. So keenly watching out for what comes next, because They had given very clear indications about the kind of loss-making businesses they had to get out of, how they are very focused about their ROEs and the return ratios, and they've managed to deliver it at least so far. And those were some difficult calls that Dr. Anisha had to take with respect to weeding out some of the loss-making businesses, but has created huge amount of wealth for the investors. Especially M&M has seen quite a bit of re-rating already, and even in the month gone by, M&M has seen a solid run. In terms of the other internals of the market, yes, insurance is one pocket which is running along, sugar is the other one, but chemicals as well as fertilizers has been one space which has some people on the sidelines as such. Sudeep, would you want to dive in right now within these chemicals and fertilizers stock, or still wait for some stability, because quarter after quarter the management commentary continues to be maybe we'll see recovery after a couple of quarters?
I agree with you. I think this is one sector which has disappointed the investors for quite some time. And, even last quarter, I think results were nothing great. But we do see green shoots in this segment. And we believe that, I think, a turnaround like scenario in this sector will emerge very soon. As far as, specialty chemicals and chemicals is concerned, there are pockets which are doing well, like CSM segment, which PI Industries is present, and I think that is one area where there is significant potential, and they have been doing pretty well, and they will continue to do well. The other companies which are getting into CSM segment also have good potential. However, the generic special chemicals and specialty chemical companies have been suffering because of the overproduction and dumping by China in the global markets, and also the general industrial demand coming down in Europe and to an extent in US. But I think things are turning around. The stocks are depleting, and we expect recovery in some of these focused chemicals and agrochemical companies. So, some of the companies, even a company like UPL, which is the 5th largest agrochemical company in the world with global scale operations in multiple geographies across the world, I think we may see recovery very soon there as well. However, I must warn that, if you are an aggressive investor, then only enter these chemical companies at this stage, because there are still a lot of volatility, and these are global commodities which they deal with. So the factors keep changing on a continuous basis. Volatility is the order of the day as far as chemicals are concerned. So be a little careful when you're entering chemicals.
Okay, let me take it across very quickly to Sharad as well and find out what's the chatter across the dealing rooms, and is it as quiet as it is in the market? Sharad?
Well, yes, in focus, the stock is Navin Fluorine from the chemical space, and what we are gathering from dealers is domestic institution buying is coming across a couple of counters. Largely, a PMS is said to be adding its position already in the company. Now, the stock itself is at a 5-month high levels, and the last 6 sessions, the stock has been trading in the green, as well as we are seeing buying happening across the domestic institutions. Now, interestingly, the key domestic institutions already invested in the company includes the names such as ICICI Pru Mutual Fund and Aditya Birla Mutual Fund, and even ace investor Ajay Upadhyay has 1% stake in the company. But Street is factoring in a major announcement, and that is the new MD Nitin Kulkarni has been appointed for the next 5 years. Now, interestingly, this important appointment is something which the Street is cheering, because he has a strong experience in the specialty chemical CDMO segment for last 30 years, and he was already heading the business development in the specialty chemical in the company way back in the 90s and the early 2000s for the company. So that is something the Street is very bullish on. Also, there has been a revival coming in the chemical pricing of certain products of there as per our channel checks, but the overall export data which we saw for the month of May is still dismal when it comes to Navin Fluorine. But we are seeing PMS and some domestic institutions lapping up the shares as per channel checks.
Okay, time now to get some BTSC trades from technical experts. Kunal, you go first.
Gujarat Gas is something which I'll be bullish on. The stock completing a bullish flag formation on the daily charts about 600 levels. So would suggest to buy with 655 as a target, stop loss at 612. And Garden Reach is something which I'll be bullish on, especially after today's move. The stock has already moved hard to 1500 levels, so I think traders could look at a fresh target on the upside, say closer to 1585, and stop loss could now be trailed to 1485.
Rudramurthy, what's on your list?
For me, Vedanta looks very strong. It is now consolidating at levels closer to that 435, 440 zone. One can buy for a target of 455 with a stop loss of 435. And Adani group of stocks also having made a consolidation is now ready for a next up move. So for me, the preference is in Adani Enterprises, looking at target of 3,275 with a stop loss of 3,190.
Sandeep, in the last few minutes, we have seen a bit of a up move on some of these hospital stocks. So Fortis, for instance, is actually higher by 2.5%, and Max Healthcare was having a good run this week. In fact, yesterday that stock was up 8%, Sudeep. Today as well, that stock is in the green. What's your view on the hospital stocks?
The entire hospital and healthcare segment has witnessed significant amount of activity over the last 1.5 to 2 years. There has been a lot of corporate action, acquisitions, PE funds coming in and investing more and more money, and consolidation. So I think it's a very, very interesting space. The scope and opportunity of this space to grow continuously over the next 5-10 years is humongous. And I strongly believe that companies like Apollo, Max Health, I think they will continue to deliver excellent performance and growth year on year. So yes, the valuations of both these stocks I mentioned have reached elevated levels, but still I think there is a significant opportunity considering the rate at which they are growing, and then they can grow in future. As far as the diagnostic space is concerned, I'm a bit conservative there. The competition intensity has increased significantly and may further increase in the near future. And the pricing and the margins are under pressure. So the diagnostic space is a bit careful. What I would recommend investors. As far as pure play hospitals, I think the sky is the limit, and well-managed hospitals can definitely be acquired for long-term hold.
Okay, point taken. So hospital stocks are clearly taking a lot of traction right now, and there's good reason, as Sudeep was also talking about it. In the meantime, taking stock of what else is happening in the market, not really too much. It's Oracle Finance, which is up another 10% today. Remember yesterday as well, that stock was higher. Rudra, do you look at this one, Oracle? Because I know the global company and the parent reported its earnings and they were strong in terms of the guidance. But not sure why the company back home is also that interested in it.
See, first of all, the fundamental reason is free float is too small for this company, and it is just that which is making the stock to move up like this. And even on chart, if you see, yes, around 9,000 the stock had resistance, and now having seen a breakout above levels of 9,000 today, and also there is support of volume, and as such even IT as a sector is doing great. So OFS is also making a good move. So as a trader, any dips to levels closer to that 9,000, which is a bit far from current level, yes, you can look at buying. And I would rather prefer stocks like Wipro or even Tech Mahindra for that matter, LTIM from IT as a sector. So OFSS, for me, the risk reward doesn't favor me to buy at current market price, but definitely it's a buy on dip. However, I would prefer Wipro, Tech Mahindra or LTIM from the IT sector, and I'm very, very bullish on IT as a sector from these levels.
Coming in on IT sector at the moment as to what's happening there. But in the meantime, we're just watching out for the market mood right now. And at the index, it's been quiet. I mean, one would assume that perhaps the ticker is not moving because since the time we started off the show, it's been just around that 23,395 thereabouts. Bank Nifty has been, headed lower, and the broader markets are outperforming a bit. But at the index level, it's really, really quiet at the moment. It's clearly about individual names because the broader markets is outperforming. But talking about the banking sector, Sudeep, is it time to put money to work in the banking stocks, whether the large caps, whether PSUs, whether mid-tier, or perhaps you'll get better chances, stay away from the underperformer for now?
Well, I think if you are looking at a short term, I think it's better to stay away because, Bank Nifty has been struggling to touch 50,000. It did touch on third, the exit poll day, but otherwise it has not reached that level and is finding it extremely difficult to reach. Fundamentally, what is happening as far as the entire banking space is concerned is that the credit growth opportunity will definitely emerge. However, the deposit growth, basically the liability side, the liability mobilization is becoming a challenge within a reasonable cost. Now, every bank is struggling with the challenge that how they can keep mobilizing deposits at low cost, build CASA, and support loan growth. Now, remember, if they increase the cost of deposits, I think the margin gets affected, and that is not a very welcome development. So, under these circumstances, pretty much focus has now shifted from asset quality and other things to the deposit mobilization, the CASA increase, and things like that, where the banks are finding it challenging. So, under these circumstances, I would say that for a short-term investor, I think it's not ideal to enter. I'm not talking about day trading and things like that. But from a long-term point of view, if somebody is looking at this entire space, I believe, let's say a bank like an HDFC Bank at current level does provide an interesting opportunity. PSU, SBI we like, but not at current level because it has moved up quite a bit, and no point entering it at this stage for, maybe there'll be better opportunities later. So private sector, large cap bank like an HDFC can be looked at current level from a long-term investor's point of view.
Sure. Sudip, what's your view then on the IT pack?
Well, Aisha, I've been positive on IT, and I believe that the entire talk about fresh orders not coming, US slowing down, and all that has been proven to be wrong. US hasn't slowed down. US growth is on. There are challenges here and there in pockets, but fundamentally, US economy is strong. There is no recession whatsoever. Under these circumstances, the large US conglomerates have to and will start spending, start increasing their IT spend. This quarter, the current quarter we are in, that is Q1, we may not see a major improvement as far as Indian large IT company financials are concerned. But I expect from Q2 onwards, we will start seeing incremental orders will start having positive impact on their financials. And that will start getting reflected in the prices as well. As far as mid-cap IT is concerned, I think one needs to be a bit careful about the valuations at which they are. However, one can focus on specific verticals. What I mean is that, let's say, travel and tourism globally is doing exceedingly well. Now, an IT company focused on travel and tourism will continue to do well, irrespective of the valuation at which it is quoting. Similarly, IT companies focused on automation, on the automobile industry, the EV transition, and things like that. Let's say persistent systems, Tata Technologies. I think these are the companies in the mid-cap space which one can buy for long term.
Okay. In the meantime, just want to mark a couple of other movers. While the Nifty is really not doing anything and we're just lying very quiet and ranged on the index, just a couple of buzzers in trade. Oracle Finance, of course, is holding out well. It's now notched up a good 11%, in fact, in trade. Siemens, Chola Finance, Dixon is higher by 5.5%. Balrampur Chini is perked up quite nicely. L&T is now sitting at a 2% gain. While it may not reflect really on the index because that has its own share of tug of war playing out right now, but HDFC Life 3.25% higher there. M&M holding out by about almost 2.6%. Titan looking good. And of course, some of these sporadic technology plays are looking very smart. The one stock which is actually holding up very well is also Paytm. It's up a good 7% for a second consecutive session. I mean, yes, it's partnered with Samsung. But in the meantime, IRDAI has also accepted the withdrawal of application for registration for Paytm as a general insurance company by Paytm General Insurance. Sudip, just wanted to understand, I mean, it's pretty speculative, all the news flow right now around Paytm. You wouldn't venture in to buy this stock right now, would you?
No, definitely not, Aisha. I think it's all, a lot of news is coming out. Things haven't stabilized. There are lots of moving parts. We don't know where things will settle, when things will settle. So, buying currently is a pure participation in speculation, and I won't recommend that. Let's wait and watch. Let's see where Paytm settles, what are their main businesses, what are the revenue streams, and then only take a call as far as Paytm is concerned.
Sugar though, Sudeep, the government is mulling raising the season sugar minimum sale price. I mean, all these sugar stocks are on a tear, but there's been quite a flip-flop as well, which the government has done previously late last year, which is when you did see a massive correction play out also on the sugar stocks. But what's the call now?
I think sugar is going to be good. I think there are some long-term trends which are emerging in sugar, which are excellent for the industry. First of all, this ethanol blending. Government is talking about already they have reached about 15% limit, and they're talking about taking it to 20% by FY25 end. And so, under the circumstances, this is a structural change which is happening in the sugar industry, and it will help. Of course, the MSP needs to be relooked, MSP needs to be increased so that the industry continues to survive and thrive. That I am reasonably confident that will happen, considering that we are past the elections. So I think things should fall back to normal levels, and MSP will be looked at definitely. The other interesting factor which is happening as we speak is there has been an unseasonal rain and flood in Brazil, which has affected the crop there. And that definitely will have some impact on this entire sugar business and sugar industry. We'll have to wait and watch how that pans out, how that impact pans out, what the government do they allow more exports catering to the incremental global demand or not? And we have to examine all that and see.
Right. Okay, Sudip, we'll let you go on that note. Thanks as always for taking the time out and joining in. Just looking at a couple of...
If you like this video, then like, share and subscribe to ET Now.